You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, where you can find all of your favorite archived episodes of Volatility Views, as well as, of course, our latest program, TWIFO, This Week in Futures Options, which will be going live in about 3 hours from here. So if you are so inclined, you can tune back in. We, of course, stream Vol Views every Friday, noon Central, 1 p.m. Eastern, and TWIFO, 3 Central, 4 p.m. Eastern. Of course, you can get them all on demand on our network whenever you like. They go out the following Monday, and you can download them, stream them to your heart's content after the fact, wherever you like. Of course, the easiest place to find all that stuff, the mothership, theoptionsinsider.com. While you're there, of course, click on a few articles, read some headlines, breaking news from the options market, all the fun written stuff. It's not just a radio, folks. We do a lot of radio, but we do also have a lot of written content as well. Surf on over to theoptionsinsider.com to check it out. And, of course, you can always find the rest of the stuff, the radio, iTunes, TuneIn, Stitcher, as well as via our mobile app, available for iOS, Android, and the beloved Fire OS. All right, and joining me on the old Volatility Views program today. Let's start off in the corner office. Let's go in order of distance, because I know where one of them is, because he's sitting next to me. So let's go in order of proximity to the scenic, palatial, some might even say, corner office, where we are joined by Mr. Russell Rhodes, a senior instructor over there at the Options Institute. Russell, it's good to have you back in Chicago again. You've been hither and yon quite a bit lately.
I've been hither and yon a lot lately. I got to spend the afternoon with our buddies over at Livevol and learned an awful lot last Friday. But I am home for a week, and then I'll start beaming in from the heartland and places like that in the near future again.
So you got to see the data shop for yourself, eh?
I did get to see the data shop for myself. Reminded me an awful lot of the TV show Silicon Valley.
So some people had Asperger's, and there was a venture capitalist who was kind of crazy.
I was just talking about the space. I'm not talking about the people. I'm talking about the space. It was kind
and then they have fish, and they all
more
die.
Relaxed space than the corner office.
Yes,
We'll
yeah,
put
he
it that
plays a lot like T.J. Miller, to be fair. I could see that.
That tinny voice, listeners, It is none other than the greasy meatball, Mr. Mark Sebastian from Option Pit, as well as from Carmen Line, who's joining me in studios, this time with a burrito. Nothing for the host here, of course.
How dare
but
you.
a burrito nonetheless. He'll sample my beverages and my fine wear and gear here, but no burrito. He did offer, I'm just kidding. But welcome to the show, Mr. Greasy Meatball.
Yeah, thank you. I called and said, do you guys want McDonald's? Do you guys want protein bar? And I was told no and no on 2 separate occasions.
I only had McDonald's passed along to me. I'm just saying I didn't get the protein bar
look.
offer.
I'm sorry about that.
That was a bad show. You should take it up with your walk-in who did literally walk in here and offer that paper to me, and I turned it down because I was deeply insulted. But yes, we are joined by Mr. How come no greasy meatball sandwich today?
Well, they didn't. You know what? I didn't pass Luke's, which otherwise I would have. And they don't offer greasy meatballs at Protein Bar or McDonald's, which is disappointing.
That is indeed disappointing. But what's not disappointing, of course, is the volatility review. So let's get right to it.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review. This is, of course, a portion of the show where you break down the wild and woolly and seemingly just inexplicable world of volatility. We are, of course, recording this and streaming it live Friday, noon Central, 1 p.m. Eastern right now, and most of the major indices, as of recording this, about midway through the session, off quite a bit, taking a little bit of a breather today, going into the old weekend. The S&P off over 0.75% right now. The Dow off a little over 0.5%, and the Qs leading the charge to the downside, off nearly a full percent. Of course, all of that giving the VIX Cash some new life. We were just talking about it yesterday on the option block, saying, well, I wonder maybe if during FOMC week, we probably wouldn't be surprised to see VIX Cash hit a 16 handle. Didn't take that long, Mark. It took a whopping 8 or 10 hours, and here we are now in a 16 handle. We're at a little bit south of 16.5 right now in the VIX Cash land. So perhaps that looming vol that a lot of us anticipated maybe earlier this week kind of just came rushing in today, Mark. It said, we're not waiting anymore. It's coming in now.
Yeah, it really did. And actually, VIX has been up every day this week, even though the market really hasn't done anything, which I think points toward the fact that there is some looming fear. I think people think that the Fed is going to come out really hawkish on Wednesday. I mean, I know a couple people think they still might raise rates. I don't see it, but...
Can you imagine if they in the teeth of all this data, they just say, you know what? We're just on track to raise. Nothing will dissuade us.
That would be impressive. That'd be really.
That'd be almost as impressive as if they raised in the November election cycle. Yeah. That would be more impressive.
That, and then I think the Brexit thing is interesting. I think people are watching it, and it's going to create some interesting trading over the next couple of weeks. Those polls keep kind of switching back between stay and go. It's a little like is that a Kink song? Should I stay? That's the Clash.
Yeah, I think so. One of those two. Russell's the elder statesman here. Is that what band is that, Russell?
Should I stay or should I go?
That's the Clash.
There we go. There we go.
Stadium, 1983.
I'm not sure if that's right, but well done nonetheless. If you want some good musical selections, by the way, follow Russell on Twitter. He's always tweeting out all sorts of diverse selections that he's currently streaming via Pandora. Some may surprise you.
Yeah, Justin Bieber.
Yeah, Dr. VIX is into all sorts of weird esoteric things, shall we say. A little bit of old school Britney Spears, some Justin Bieber, any pretty much Disney tween starlet. He's streaming it.
I don't know if you know this, but I'm a
Hannah
slave.
Montana before she went cray cray.
Yeah, the I'm a Slave for You video where Britney Spears has the snake is actually inspired by Russell's love for the VIX.
Well, he does have a very close personal relationship with the VIX. Some may say too close. Mm-hmm. But given in light of that relationship, Russell, what are your thoughts here on what we're seeing this week? It has kind of been a weird week. Like I said, we were just saying on the option block yesterday, we thought maybe we'd see these levels a little bit earlier. Then it kind of seemed like, the market was kind of shrugging off what was happening next week. And then it certainly seemed like they were shrugging off Brexit, at least until after we got through the bridge that was Fed and Yellen. Now it seems like all of a sudden everyone's waking up to, hey, there's something cooking next week, which is kind of interesting.
It's really interesting how I cannot recall a week like this, just assuming that we finish where we're at, where VIX goes up regardless of what's going on in the underlying market. I've seen this happen in broad-based indexes for, emerging markets where an election's on the horizon or something like that. But this is a real, you hate to say it's different or whatever this time, but I can't recall. We were up 20 points on Wednesday from the previous Friday's close, and VIX had gone up every day. And I didn't realize, how much of a disconnect we had going on until I started checking into things today and late yesterday. But yeah, and now with the market giving things back on Thursday and Friday, it's easy to look back and go, well, yeah, VIX was kind of telling us that there may be some nervousness out there that wasn't showing up in the early week rally, which I guess we will now call a short squeeze. False rallies are short squeezes. I
think we pointed that out on the Option Pit blog on Tuesday or Wednesday that VVIX had rallied and VIX was rallying even with the market. And when I see market up and VIX up for more than 2 days in a row, that to me is a clear sign that we're about to take some money off the table, and that's what's happening. And I think you get some follow through next week. I think all the way into the Wednesday meeting, we can see the market off a little bit.
Speaking of following through or perhaps following up, before we move on to some other stuff, I know you guys, Russell, and I think Mark, you were there as well. You had a big volatility event, a CFA event over there at the Skiball this week. Anything interesting? Any interesting nuggets come out of that event, Russell or Mark?
I was pleasantly surprised by the level of knowledge among the general, because, a CFA crowd, they're institutional traders, but they are, they're much more general in nature. And I felt like their understanding of the different ways that you can get exposure to volatility was higher than I've experienced when I've gone around the country and talked to CFA groups. I was pleasantly surprised by that. I thought we were going to have to tone it down a little bit, and nobody did. Mark Shore, kept things at a very high level, talking about V stocks versus VIX, and both Mike Thompson and Mark Sebastian, spoke at a pretty high level, and I think everybody was following them fairly closely.
So if you had Mark and you had one of the Thompson twins on there, did you then call it a Volatility Views panel? Is that what you called it? Trademark pending?
I did not call it a Vol Views panel, but I think I did a pretty good job moderating the panel, because the job of moderator is to not be heard and barely be seen, and I stayed out of the way and just let things go.
Yeah, it was a really good panel. And actually, the one before us on kind of individual option selling was interesting as well. I thought Stacy from what's her last name from
Gilbert.
Stacy Gilbert. Thank you. I was going to say Stacy Porter, but Stacy Porter was the girl that lived behind me growing up. Stacy Gilbert from Susquehanna is always great. Xerxes was interesting as well. And I'd not heard the April woman speak before, and she was excellent as well. It's good group on how they look at vol and how they think about things. And then you also had our panel. I think we really did dig into VIX use, and we had some good questions on how do you engage VIX, and how do you look at the options, and how do you put that how do you use this thing as a hedge. And it was just a really good discussion topic, and we had some competing ideas. I know Stacy and I had a conversation after the event, because she had gone on saying, "Hey, you should almost always be hedged," and then I went up right after her and said, "You only need to be hedged when things actually look like it's worth being hedged."
Isn't she the same one who said at RMC that it's going to cost you like 9% to be hedged like the entire year? Yeah. And she was advocating being hedged the entire year.
Yeah.
So she's advocating. Well, obviously you can find ways to diminish that.
Her point was you can buy. If you're hedged, and this isn't a terrible point, if you can put on a hedge and it allows you to do other things or to trade normally, and it can potentially make you more money, was her point. If you've got those baby puts on or things like that.
So it's kind of like that mentality argument for hedging, that it frees you up mentally to do other things and trade more.
That was her main argument.
And I've heard that before. Obviously, that's a hard thing to quantify, because how do you quantify the liberating feeling of having puts? Maybe that should go into the CVO marketing, Russell.
The liberating feeling of having puts.
Buy puts, and you too will be liberated. I don't know. I'll get my marketing invoice out to you guys forthwith. But yeah, I have heard that argument before. Again, you can't possibly quantify. It's hard to do, actual research on it. But there is there is something to it. Hey, I'm hedged. We joke about it on the option block. You can sleep at night if you are so inclined to do that. So that 8 to 9%, depending on where you're looking, how much is going to cost you, and obviously where you're buying your puts is going to cost you more or less. But somewhere in that 8 to 10% a year range, you get something for that. You're not just giving up all your money for nothing.
And she made one. Stacey Gilbert. Really, puts aren't that expensive. Calls are super, super cheap right now. They've been absolutely blasted. And so, skew is steep, but skew is steep not because puts are overbought, but because calls have been sold into the ground by call overwriters. And that led me to think that, some of the things that I like to do involving call purchases, maybe that's why they make so much sense right now, is because upside is so cheap.
Gotta love those call overriders, right? They make the premium buyer so happy. Sometimes. When you want to come in to buy. When they're cameraing it while you're owning it, not so much.
Not as
much. But when they set it up for you and then go away, they tee it up for you. That's kind of nice. But moving on, some other things that are kind of interesting. I was reading something the other day. I think it might have been over there, the TD newsletter, one of those ones, and they were pointing out an interesting setup over there coming out of all things. Looks like friends at Skiball didn't pay their Skype bill again. Let me just get Russell back while we're talking here. But Mark, we can set this up. It's kind of interesting. I haven't really watched a lot of these indicators in the past, but they were pointing out a lot of, in addition to VIX and other things being interesting out there in the market right now, also kind of correlation taking a bit of a turn to the downside. And you can see that yourself if you look through. Skiball has always got a bunch of interesting esoteric indices that they put out there and disseminate. And one of them, again, we haven't talked about it really on the show before, is this SPX Implied Correlation Index, ticker symbol JCJ. Have you paid attention to this at all?
I've looked at it in the past, and I do know that there are people that really like to look at implied correlation. And when implied correlation is really high, that is a sign that the market's kind of in trouble. And when it's really low, that's generally an all clear signal, correct? Isn't that generally the thesis there? Basically says
that's how it's supposed to work, right?
You can buy stocks on fundamentals, and you don't have to. And systemic stuff is less likely to affect your if you buy a good stock versus a bad stock. And it makes sense. I think it's certainly makes sense that in a market like this, correlation would be down. I'm wondering whether maybe that has also partially due to the whole bond allocation and the amount of cash on the sideline, why that correlation is starting to break. You've got a lot of money in good stocks and very little money in cruddy stocks or in troubled stocks or in some of the ones that are dying. So kind of interesting.
Yeah, I'm looking at this chart here now of good old JCJ, and it has been moving to the south, implying that correlation, this is, I believe, between the major S&P names here, is moving down. We did see it spike, of course, back in those turbulent times of the beginning of the year when the market was selling off 1+% a day. We saw correlation spiking and then kind of coming off the tail end. Mr. Corner Office, are you back there, sir?
You can attribute this to some macro risk that's coming into the market. It's probably the reason, and of course, hindsight is really easy here, but it's probably the reason that VIX has done what it's done this week, and it's having the same sort of impact on the implied correlation index, because the implied correlation index just basically takes a look at what's going on in the SPX world versus what's going on for the implied volatility of a basket of stocks. And, it just, when we reach one of these situations where everybody's more concerned about a macro event than company-specific events, it behaves a little bit differently. The combination of, what we were talking about, a couple of things, actually, the Fed and Brexit, in conjunction with us being in a very quiet period between earnings and out, we're basically in the slowest period as far as earnings goes that we get every 3 months. So all of those things are coming together to have an influence on it's JCJ now. It changes every year. The ticker's JCJ this year. It can be J, K, or I depending on what year we're in.
Yeah, that's right. I wasn't that familiar with JCJ when I first saw it, and I think that explains it because it has evolved, shall we say, over time. But a lot of interesting stuff cooking up here. We're talking about how kind of the market is somewhat responding to this whole impending Brexit / FOMC thing. So we thought we'd ask our audience, our listeners here at the beginning of the week, how they were perhaps shaping up for this. We specifically were focusing on Brexit because at the beginning of the week it certainly seemed like there wasn't a heck of a lot of a chance of anything really cooking with FOMC. So we asked our audience here, how are you prepping your portfolio for Brexit? And we gave them 4 choices. I already talked about this with Mark, so I already have his idea, Russell. I'll get your thoughts on it. We gave them the choices of buying S&P / index puts. We didn't want to box them in if they wanted to go, Russell or NASDAQ or something. Or just buying vol. Again, we were kind of open there. VIX, VXX, whatever your flavor is. Or moving to cash, or Brexit won't happen. Those are their 4 choices. So, Russell, A, what is your call? And then B, what do you think? What do you think is winning? And then what would be your choice?
Well, I want to make 2 choices, but that's not that's against the rule. I'm always trying to break the rules. First off, I think Brexit's going to happen. And I don't think it's going to have that much of an impact on the equity markets. It's going to have some impact on the British pound, maybe the euro, but I really don't think it's going to. So it's not something I would worry about with respect to the U.S. markets. And if anything, if I had some sort of exposure, I'd probably just go to cash and stay on the sidelines till it passed. But I don't even think I almost feel like it's going to pass, but it's going to be almost a non-event when it does pass.
So you're voting for it's going to happen. So what do you think is winning our poll? Do you think, I love how you missed your rule breaker corner office here.
Okay.
Do you think people are voting for buying puts? Are they buying vol, moving to cash, or are they saying it ain't going to happen?
Moving to cash.
See, a lot of people are picking that.
I said the same thing yesterday.
Yeah,
okay.
inquiring minds.
I didn't cheat or look. Am I right? Or?
Yeah, inquiring minds want to know. Everyone's leaning towards moving to cash. That's the loser of our poll. Only a meager 10% picking that. Pretty much buying puts, buying S&P / index puts, and buying vol are tied at about 24, at about a quarter each. And it was half. It's come off a little bit, but Brexit won't happen, leading the charge a whopping 42% right now.
They're wrong.
Still a few. They're wrong.
But I want a caveat here. I want us to think about the demographic that would answer your poll.
Yeah,
haters got to hate and traders got to trade.
Yeah, we definitely hit an interesting. We hit a subset of the audience out there that are hardcore active options guys. So yeah, we like to think we represent the broad universe, but very targeted from an options perspective. So that certainly may move it a little bit. Yeah, none of them are. I thought cash might be a little bit stronger as well, but no, none of them. They're in full bore, baby, buying puts, buying vol, or just saying the hell with it. It ain't going to happen, which is kind of intriguing in and of itself. Of course, that doesn't mean the broad market feels that way. Looking over there, good time, Mr. Corner Office, to be in the vol business, particularly in the VIX Futures business. You guys have been lighting it up out there of late from a volume perspective, setting a bunch of records. Let's see, about 501,000 contracts back just this week, June 7th. So a new open interest record for VIX Futures.
Wow.
And then also surpassing that 500,000 mark for the first time the day before, D-Day, June 6th. A very auspicious day. Then we have open interest hitting a new record of, again, on June 7th. And open interest up nearly pretty much up nearly 100% year to date. That's through June. So I don't know, Mr. Greasy Meatball or Mr. Corner Office here. Any surprise those numbers? I mean, we were talking, the narrative was going to be coming into this show, VIX kind of muted, but VIX Futures lighting it up. Now we can't really say that.
I mean, if you look at the way things are shaping up, for a little bit there, leading into really Monday, it was so cheap to hedge in VIX, and the VIX Futures, that very front end, it had kind of backed off. I mean, if you look at the kind of the contango curve, super steep except for that front month contract. So there was a real opportunity to set up a hedge, and I'm sorry, but when July got below 17 early this week, why wouldn't you want to trade in VIX Futures if you think there's some upcoming risk, and with everything that's going on, I'm not surprised, and I think you're going to continue to see this. I think we'll break 1 million in open interest probably in the next year. That'd be my bet, especially if we get a major event. And so I am unshocked by the activity. I just think that, especially if the VIX weekly futures start trading, which they might. I mean, I think if there was ever a time for the VIX weeklies to start trading, it's that June 29 contract that has Brexit in it, and that's going to be a really interesting contract to trade ahead of that vote. And I think you'll see some activity there.
I like that. Sebastian Unshocked. That is the headline of the day.
Unshocked.
I pulled up another graph for you to look
VVIX,
at here.
look at that.
We like talking. You can't see it, listeners.
I mean, we put out research every week for Prevon Tullett. I write a research article, and I said on multiple occasions, the VVIX is not going to stay below 80.
It clearly did not feel like hanging out down there.
If you aren't buying options, if you aren't hedging, you are a blasted fool. You could do a 4.1x2, buying 2, selling 1 on Monday for even money or even a credit at like the 1923 strike or the 1822 strike. Just too cheap with that much time to be able to put on that kind of a hedge. And that trade is doing exceedingly well today.
Yeah, listeners, you obviously can't see it. We'll put a graph of it in the show notes for you to follow along. Or just type VVIX into your platform, your quote vendor of choice. You can see exactly what we're looking at just in the last few months of VVIX. It's been a turbulent road, but we were saying many times on the show recently that VVIX was kind of well into the low end of that range, well into the 70s. It had peaked beyond 100 recently. And, of course, here we are back again as we are recording this right just a tick south of 100 right now, back in the 99 range, showing that the volatility of VIX is back, and it is back in force. So something certainly, as Mark was referring to there, very interesting to watch. I know, Russell, you pay a keen attention here to the VVIX. What are your thoughts on just, I guess you got to call it a VVIX explosion at this point, right?
It's a VVIX explosion. I do want to step back for 1 second to that.
No, there's no stepping back. There's only plunging blindly forward. No, go ahead.
You can't stop me. I'm on a roll. Look out. I just wanted to note something with respect to the open interest for the VIX futures. We got to tip our hat to the ETN guys and the ETF guys, because you've got 1.5 billion in VXX right now. That's the amount of capital in that fund. You've got 845 million in UVXY, and you got to double that for their exposure. There's $3 billion. If you take XIV and SVXY, which are the inverse, the two big inverse ones, you've only got about $2 billion in those together collectively, about 1.7 actually. So you've got net exposure. Sometimes those exposures net each other out, and with a lot more money in the long than the short funds right now, I think that's been contributing to the constant grind higher in the in the open the number of VIX futures that are open, or the open interest in the VIX futures contracts. That and the low dollar value of them. If we were up around 25, that's gonna take some number of contracts out of the whole equation as well. So I think that's a source of it. Some of it is just we've also. I think the open interest on the call side, on the option side, is as high as it's been. So you've got the market makers that are having to hedge themselves with the futures. Again, more open interest. With VVIX, Mark Sebastian has been dead right all year, noting that VVIX remains high. And we could see that it would remain high, but reading into it that, VIX, when it got to a lower level, was probably a buy and giving you opportunities to get into it. Because VVIX is really, sometimes it's worth paying more attention to than VIX. And, maybe in a higher volatility regime like we're in now, that's the thing that you really need to focus on instead of VIX when it looks like VIX is coming under pressure.
Yeah, Russell, if you want to look at like VIX or if you're looking at VIX, I always say you have to look at VIX and SPX together to really get a read on what the market is doing. VVIX, on the other hand, you absolutely do not. VVIX straight up is a great indicator on what is going on. And so you can actually look at VVIX in a vacuum, where I really don't feel like VIX in a vacuum gives you a lot of information. And just because of the way, because of the way VIX has this natural correlation to the SPX, and VVIX does correlate to VIX, but just very differently than kind of the negative correlation of of the cash index.
Yeah, VVIX, we don't talk about as much on the show, but we probably should rotate it in more because you're right. I mean, that's something for Mr. Corner Office to come out and say there may be more utility for the end user. And we've often said that on the show, but it's worth repeating again. And the VVIX number, which is not as widely disseminated, obviously. It's not quoted every day on CNBC the way VIX Cash is kind of just thrown out there now.
Oh, VIX Cash is up 10% today, Mark.
The sky is falling.
VIX is up 10%.
Yes, the contextual nature of volatility, something we've discussed many times on this show. But interesting nonetheless that you're right, VVIX back in force, which is certainly I kind of agree. Whenever I see that, you can see the movements of VIX every now and then, and they're interesting. But we see it in correlation with some huge spike in VVIX right now. That certainly then tends to corroborate the notion that something is up. Speaking of something is up, it is time. Something is certainly up on the show because it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
You guys know the drill. You know what that sound means. And Russell, when he's done laughing, he will fill us in on the latest developments, the hot activity that is catching his eye. Has been a pretty active week out there. What's catching his eye out there in the VIX weekly options? Have at it, Mr. Corner Office.
June 29th. I'm stealing this from Mark Sebastian. Something we'd actually talked about a few weeks ago. It looks like somebody's exiting a trade today and exiting at a loss. A while back on May 31st, somebody sold the June 29th 15 puts and 15 calls and took in about $2.50, $2.52 or so. They also bought the June 29th 21 calls and paid 40 cents or so for those when they did all that trade together. They're getting out of the straddle part. They're getting out of the short straddle part, which I find kind of interesting. And they got out of it today. I mean, it's almost the exact same size. It's got to be the same person. And they bought it back for $3.05. So they took a 50-cent loss on the on being, I guess they were selling the straddle with the hopes of getting a little time decay and then hanging on to the 21 strike calls because they did not do anything with the 21 strike calls, at least yet. So I just wonder if they were trying to get a little cute, thought that VIX wouldn't do a whole lot, threw around now. Maybe they were thinking that they would be safe until just before the Fed meeting, and they've been wrong. But it was interesting to see somebody try to get all strategic and use the June 29th options in that manner. They are up about 30 cents on the 21 strike calls, so the trade's not a disaster. But now all they've got are the long calls from that spread. So it was kind of an interesting one to catch both ends of.
Yeah, you don't see a lot, let alone straddles going up in the weeklies.
Right, I kept looking for the third leg, and you just couldn't find it. Went down and talked to the guys a little bit, and they said that what I relayed to you guys is what they relayed to me. Was it looks like they bought back the short straddle. But they're leaving that long call on. So they're still long the June 29th, 21 calls. And the biggest open interest in the June options are the 19th and the 20th. Both of those are the 19 strike and the 20 strikes. Both those have well over 20,000 contracts open. So and there's not nearly as much put activity around that date as call activity. So, maybe I'm wrong when I say that Brexit will occur and nobody cares. At least a few people are prepared for it.
Yeah, I mean, this guy clearly does. And there is, Russell, I know it's not part of your weekly rundown, but if we looked at the monthly rundown, the amount of electronic upside call buying in July is, it's like I turn around, I turn around to do some business and I turn and I look back at my IM and somebody just bought another 25,000 July quarters. It's through the electronically. Somebody's been amassing a huge July position above 20 at all sorts of different strikes. I think it's mostly Morgan Stanley. I want to say it's a Morgan Stanley customer. Been building this thing up a lot, and he's got a substantial upside, he or she has a substantial upside position now, and it's been very interesting. We did see a lot of downside put buying for a little bit, and that has stopped. And some of those downside put buyers have come back in and started selling stuff.
Yeah, I'm looking here at the chart as we're talking, and you're right. There is a lot, and even though overall VIX isn't still overall super call heavy, about 2.7 to 1 calls over puts. If you track the VIX call to put ratio, that's nowhere near as crazy as it's gotten at times in the past. But yeah, we have to break it down by July. I'm sure that number will be a little bit more skewed with a ton of open interest. 25s, nearly 200,000 contracts open on that July 25 strike alone. We'll get to some of the other hot strikes. 30 obviously has been the strike du jour for many months now. We'll see if it makes the top 10 again this week. Spoiler, I think it's going to. But looking at the week that was from an overall VIX options perspective this week, it was a fairly active week, as we alluded to. Many days out there blowing past the ADV, the average, the ADV, which is about 555,000 contracts right now. Tuesday hitting that almost exactly. Monday about 730,000 plus, so a pretty active day on Monday. Wednesday slightly under, about 470, and again about 585 coming in on Thursday. And today, like I said, we're only about halfway through the session or so today, and already pretty much right almost exactly at that ADV again as a result of this extended sell-off we're seeing in the market here today. So people loving themselves after a few light weeks. People loving themselves some VIX options paper. A lot of things lighting it up. We saw, looks like a bit of a vertical going up. That's one of the size prints we saw today. It was the July 1822, doing it about 15,000 by close to 30, so a bit of a 1x2 going up here, which is one of our, of course, favorites out there. Again, 18. Those are the strikes you were alluding to earlier, wasn't it not, Mark? The 1822 one, those are your strikes du jour.
Yeah, there's been a lot of those trading, and those have been the 1822, the 1923, and the 2025. I've all seen huge amounts of pretty ginormous back ratio trading.
Yeah, in fact, we have a listener question about it later if we have time to get to it, about when are those 1x2s favorable? Right now, clearly a time when those things are lining up in your favor. On Thursday, we saw some, looks like more verticals and just straight up buys actually as well, but looks like a vertical. The July 25-30, again, two of the more active strikes we've seen out there of late, 25 and 30, lighting it up quite a bit. Also, looks like a 30-40 in July going up, only 6,000 times, 15,000 on the former, about 6,000 on the latter. On that vertical. And again, you're right, upside July 25, lighting it up earlier this week, Mark, on Wednesday. Nearly 24,000 of these, actually close to 50,000 total on the day. A paper coming in, gobbling up these July 25s, paying around a half a buck, 53 cents or so for big blocks of 25,000 at a clip. So yeah, people still loving themselves that 25 strike as well, whether they're doing it but in 1x2s or they're coming out outright just buying them. They want themselves some of that 25 strike. Again, kind of going back to what we were saying before, people perhaps fearing the worst and certainly putting their money where their mouth is ahead of not just FOMC, but of course Brexit as well. Not to say the puts were completely ignored this week. We saw June 13s and 14s going up. Looks like a bit of a vertical, 8,000 times there as well on Wednesday. And again, Tuesday, the strike du jour once again was the July 25s and the 26s. Paper gobbling those up in blocks of 25,000 at a clip as well. 50 cents again around there, 53 cents for the 25s, 42 for the 26s. Again, 1x2 is lighting it up to the tune of July 1721, doing that 10,000 by 20,000 times on Monday as well. So again, 1x2 and upside calls, kind of the order of the day. What's been lighting it up this week? Well, the top hot strikes out there in VIX land. Number one, yet again, I guess some of you could probably guess what it is. It is the June 25s, not the Julys, but the Junes. 371,000 of those bad boys lighting it up. Number two, still fairly close, though. The ever optimistic, not quite as optimistic as it was last week, but still fairly optimistic July 30s, 357,000 of those bad boys. Then we fall off a cliff to number three, the June 22s, just a tick under 250,000, so over 100,000 contracts, fewer of those. Then down to 210,000 of the June 30s, again, extremely optimistic. And then down to number 5 spot on the top 10, the July 25 strike coming in there, nearly 200,000, like I said earlier, of those bad boys open there. So the July 25s certainly getting a lot of love this week. That's also one of the biggest increases on the week here. It's about 20,000 of those net open interest change, and that was through yesterday. I think that number might even increase today. Then all the way down to number 6 to find the first puts on the list, 180,000 of the June 15 puts, followed by the June 20 calls, 175,000 of those bad boys. Number 8, the July 23s, 166,000. July 26s coming in next, 162,000 of those. And rounding out the top 10 of our hot VIX strikes, the June 23s, interesting strike, 156,000 open there. Total about 7.8 million. Very strong open interest right now. Again, reflecting a very active week and a lot of potential concerns out there. About 5.75 million on the calls, about 2.1 on the puts. So call heavy, but not as call heavy as it's been in the past. We've seen VIX get up to the 4+. Might be an interesting research note for you, Russell, what the highest call to put ratio we've seen out there in VIX. I believe it's somewhere around a 4.5 recently, unless it spiked higher recently and I missed it. But I think somewhere around that level seems to be where it tops out when things get extremely topsy-turvy. That said, speaking of topsy-turvy, we're kind of at the tail end of it, but Russell, I know you like to watch yourself some earnings volatility every now and then. Not a heck of a lot left on the calendar, but anything catching your eye either in last week's announcements or what's coming up that's you're watching?
Oracle's a fun one, and it's actually coming out late next week. It'll probably, unfortunately, it'll probably get lost in all the macroeconomic stuff. But the at the money implied vol for the options that expire today was around 33. It's up to 42 for the ones that expire next Friday, and then it's right back down to 33. And I always like to see. I always like to see that bump in implied volatility that accompanies a company that moves an awful lot around earnings. And they actually, I forgot what their average move is, but it's actually pretty good. They usually have if I fumble around long enough, I'll come across it. Stock usually moves up or down around 4.5%. And it's had as big a 10% moves in either direction over the last 3 years. So that's kind of a fun one to keep an eye on.
I agree. And speaking of fun, we've reached that fun portion of the show where the listeners get to take the reins, and I get to take at least a bit of a break because they ask the questions instead of me, which is always fun as we move on to the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the volatility voicemail. Like the man said, this is the portion of the show where you guys get to take the reins and fire away with your questions, your comments. He mentioned most of the outlets, most of the ways you guys can do that, but if you're streaming live, you can also fire off your questions via Mixlr or Twitter or Facebook or whatever your platform of choice is. Mixlr is probably the easiest because we have that up all the time, but you can get us on Twitter. Usually someone's monitoring that. And sometimes, if you're lucky, maybe Facebook. Those are usually the ones. And StockTwits as well. I'll probably see that as well. So if you're using some of the other platforms, I get it. You guys like to listen via the Mixlr, but you don't want to set up an account. I get it. You can ask us your live questions via some of the other platforms as well. In the meantime, let's see how many we can get through here on today's program. This one is kicking off. This one comes from 777. He writes, or perhaps she, I don't know. This is an oldie but a goodie, Mark. We get this every now and then. I don't think we've had a chance to discuss this, though, since Russell's been on the show. 777 wants to know, does the many VIX, maybe do the many VIX tradable products influence the underlying index to any great extent? Is the tail wagging the dog? This has kind of been a conversation we've had a lot on the show. Again, Russell, you haven't had a chance to weigh in, so I'd like to get your thoughts. But in general, obviously, he's referring to this explosion of VIX ETPs out there. You have, of course, the big no ones like VXX and XIV, but there are a legion, a veritable myriad of VIX-related products out there, all doing it in some different flavor. And again, hedging usually in the futures or some other combo of products to hedge all that risk they're putting on there. And all these products piling in at the beginning of the day and the end of the day and doing their different ratios and things. Some people may argue that that has pulled VIX away from being the pure notion of SPX implied volatility that it maybe once was, and now it has all these other things out there kind of pulling it hither and yon. I'm curious. There's a lot of debate on this subject. What are your thoughts, Russell? Do you think all of these many different products, particularly at some of those inflection points, like the beginning of the day and the end of the day, may have inordinate influence on VIX, or do you think at the end of the day, S&P implied vol wins out?
I think at the end of the day, S&P implied vol wins out, and even though we talked a little bit earlier about the implied or about the increase in VIX Futures open interest being impacted by the exchange traded products, there still is normally a pretty nice balance between the amount of assets in the long ones and the amount of assets in the short ones. So that offsets itself. But it's kind of like saying that the emergence of the SPY exchange traded fund had some sort of impact on the S&P 500 price action, and it did. It actually muted it somewhat. 'Cause the more things that you have that allow you to get exposure to a certain type of market, the more trading among those products you have, and the more trading among those products you have, actually the more smoothing out of the volatility, so of the underlying products. So if anything, I don't think it's had a negative impact. If anything, I think it's made it a little bit more those markets a little bit more efficient.
I don't know, Mark, we've had a chance to debate this. I've weighed in on this many times in the past. It's been a while since you and I have chatted about it, though. What are your thoughts on this kind of exploding universe of various different VIX products and how they relate back to the mothership?
I mean, the mothership is definitely the dog and the VIX is the tail, but that doesn't mean that when we do get some really serious volume in VIX and VIX futures that it can't move things around. And as we said at kind of the top of the show, I tend to think that VIX traders are smarter, and I know VIX traders are smarter, and the VIX option guys are all smart, and a lot of the people using that, because VIX is related to variance trading, which, there are not a lot of guys over on.
It just sounds scary.
With all due respect to the guys in the S&P big futures pit, those guys aren't swapping variance around upstairs any time in the next few years. So you do see that VIX will start to move and can be a leading indicator to SPX. But really, when SPX moves, VIX has to move, and that's just what it comes down to.
It's funny we say that they're some of the smartest out there, yet we often joke on this show just how completely schizophrenic, borderline bipolar the VIX traders can be. Where we're sitting here in a range, all of a sudden we got to be here. The VIX has to move 3 handles today, and it seems like sometimes as intelligent as it can be like house cats. They got to be over there. Now they got to be over there. So yeah, VIX has that, and volatility in general has that kind of bipolar nature. Again, a topic we've discussed many times here on this program. It's manic. Oh no, it's very, very depressed. But still interesting stuff. I think we've got time for let's see. We got one more in us here. This one actually kind of leads nicely into the crystal ball. Maybe it even foreshadows it. I don't know how we'll answer this without spoiling the crystal ball, but we can try it nonetheless. This comes from Skiball. He writes, "Hey, where do we see the VIX going, and how will it?" This second part is interesting. And how will it impact stock picking in this market? That's not a tack we usually take on this subject in the past. Obviously, I guess it depends where we see the former going first. I don't want to pollute our picks for the crystal ball, so maybe we'll hold off on answering the first part of this question until about 2 minutes from now. But we can talk about the second part, which is how is VIX in general impacting stock picking. Obviously, if we feel VIX is rally ho mode for the next few weeks, then it's probably going to make stock picking a wee bit more challenging. Things tend to be moving around quite a bit. So again, that kind of depends on our view. It's a hard question to answer without spoiling the crystal ball. And in the latter, of course, if we think it's going to be the doldrums, quiet seas ahead for VIX, then probably a little bit easier to kind of pick your shots out there in volatility. I don't know, anything else you want to add, Mark? Kind of delicate dance without spoiling the crystal ball, but what do you have to say for our friend here, Skiball? How does VIX, maybe in general terms, where do you see VIX going, and then without specifics for next week, and then B, how does that impact stocks?
Well, let's just talk about the latter part. The higher the VIX is, the more correlated the market tends to be, and the higher the VIX is,
we saw that with the JCJ chart earlier in the show.
And the higher the VIX is, the more likely your stock picking isn't going to work, because now, and by that I mean if it still might work in that if you pick a good stock, it won't lose as much as, some crap box stock. That's a technical term. A CBS and...
Is that a literal crap box stock?
Crap box
the
stock.
The stores aren't
CBS.
The nicest. I could see that.
So a CBS, that'll really sell off a lot more. But that's what I think the piece you have to understand is that when the market's off, your stock picking is still going to be somewhat determined by the S&P 500, and that's going to cause you problems. So you have to be aware.
I like that term, crap box stocks. That'll be our picking. That could be a new show on the network. Picking crap box stocks here on maybe how to avoid picking crap box stocks in the near future. Anything to add on that, Mr. Russell, without tiptoeing on the crystal ball, which is coming up in like 2 minutes?
I'm not going to tiptoe on the crystal ball, but yeah, I totally agree with what Mark Sebastian just said. Yeah, when the market comes under pressure, yeah, all the stocks are going to kind of move together. It has that sort of an influence. The thing is, it also gives you the opportunities. The whole Warren Buffett buy when there's blood in the water and all that kind of stuff. You probably had some great opportunities to pick up stocks you like for the long term back in August last year, and any sort of similar reaction, it's going to be the same thing. So, yeah, you can put a positive spin on that.
Speaking of putting positive spins, get those positive spins ready, Russell, because it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, it's time for the crystal ball, the portion of the show where the rubber meets the road and the brutal slap meets the face sometimes, the cold water. Use analogy, your own choice of analogies here, metaphors for how to describe this segment. It is indeed madness as we attempt to dive into those frothy waters and attempt to divine what the vol gods hold in store for us in the coming weeks. This coming week is particularly challenging as we have a lot of things on the horizon. Let's see, 2 weeks ago here, I think it was me and Andrew, and the VIX was vacillating about a 13 handle. I think I ended up winning at the 13.5 level. Last week, we had a guest, and so a guest, and Mark piggybacked infamously on the guest to also join his. He pulled a with Taylor and said, "I too am with your 14.25 pick," but that wasn't enough to save you. I was on the lower end of the spectrum. I was leading the charge until about midday yesterday. That shows you how fickle VIX is. It seemed like my 13.5 pick was a lock. And then here we are a day later or so, and we're a couple handles away from that. So, Russell, finally, you're ever optimistic. You've been buying the upside of VIX for a couple of months now. It's finally paying off. And I think it helped that you also moved a little bit down the spectrum from your ever optimistic 17, 18, 20 handles down to a little bit more reasonable 15.25. So you win. You win by you're the least off this week. You're only off by a handle right now as we're talking, listeners, as we're recording. VIX Cash right about 16.25. So yeah, interesting. I don't think any of us predicted. Obviously, we didn't that it would be this aggressive, this fast. We thought it might get a little bit of a bump. But it also seemed like non-farms maybe took that off the table. So it was kind of an interesting time last week. That said, Russell, you win the dubious honor, sir, of going first for this week. What are you feeling? Next week, a challenging week. We got FOMC, of course, Brexit looming in the future. So what are you feeling?
16.5. About where we are right now. I think everybody's going to remain on edge until we get past the Brexit vote.
So you're feeling a 16.5. So pretty much
I'm feeling a 16.5.
You think after all the Sturm and Drang is shaken out next week, we're going to be unched from a vol perspective. Interesting
yeah,
thoughts.
But we're also kind of high right now. So
yeah, we are feeling a little bit of
relative to where we've been. We're at our highest levels in about 3 weeks. So it's not a low guess. It's just maintaining a high level.
Maintaining that love. We'll see if VVIX and or VIX can come off a wee bit next week. We should be fun to guess VVIX. That'd be a challenge. That might be a bridge too far. Let's stick with VIX Cash. That's troubling enough for all of us. Mark, Russell, well, you were about 14.25 last week. Again, you were kind of so I discount your pick.
Yeah.
And this week, are you still feeling those levels? You feeling a little bit higher? What are you feeling?
I'm feeling a lot higher. All right, the VVIX is now back toward 100, and to me that's a sign that, and we're only off a little bit. To me, that's a sign that there is going to be more and more vol premium buying, and there's going to be a lot of people setting up hedges next week. I think you could see the market only down another 25 points maybe next week, something small, just so a little money off the table, and I think you could see the VIX over 18. So I'm going to say 18.01.
Wow, you're swapping places with Russell, saying. You're the resident VIX buyer here.
Yeah, I'm going long and strong.
Are you talking up your portfolio again?
I'm not.
You got some 1x2s lurking in the back pocket.
I've got
there,
some bear.
sir?
I do have some bear 1x2s and puts.
Oh, okay.
But I don't have. I actually was short vol all the way till Monday, and then I unwound all my July short vol and flipped it. So
now I get to play the host role. I can't go where I want to go, which is probably about 16 or so, but that's not fun.
Well,
Russell's already at 16.5, so I'll go the lower end of the spectrum. I'm going to say 15. I don't really think we're going to sell off. Wow. But after FOMC, we still got Brexit on the horizons. I don't think we're really going to sell off, but someone's got to be on the other end of the spectrum, right? So I do my hostly duty and take one for the team, and I say a 15. Even I'll give myself a little bit better chance. I'll say 15.5. How about that? That's a little bit more reasonable. So we're only off about a handle from where we are today. All right, and with that, listeners, for that theme music to kick in, because it's time to bring to a close, unfortunately, this very fun episode of Volatility Views. Always fun to have people in the studio. I have to get the Mr. Corner office out of his palatial corner office and down here to the studio again one of these days. He too can join Mark in eating and drinking and taking my fine gear and everything else that we have here in the studio. But before we go, let's turn our attention one last time to what's cooking in our respective necks of the woods. Russell, you said, of course, our show here brought to you by our friends over there at Skiball Live Vol. You said you just came out of the Skiball Live Vol HQ out of there in San Fran. You saw the data shop with your own two eyes, aka the server. So what's cooking over there? What's new? What did you learn in your tour of the Live Vol HQ?
I think gosh, I don't know if I'm allowed to give away what they're working on, but you know what the heck? It looks like they're going to enhance some of the backtesting tools that they have. We seem to be talking about that more than anything else, so that's something I would keep an eye out for from the guys at LiveVol. While we have been chattering, and Mark Sebastian has already retweeted it, you asked the question about the call to put ratio. The all-time high is, or I'm saying the high from the first day of 2010 for VIX calls versus puts, just for volume's sake, 13.7.
That's crazy town. Wow. I knew
Yeah,
there
it was
might
like
be an outlier out there.
to 1.3 million.
I knew there might be an outlier too. I didn't think the
so
outlier would be that high. I know reasonably it's like 4.5 to maybe 5, but yeah, that's a heck of an outlier.
I'm going to put a top 10 of those lists out there this weekend because there were several of them in the double digits. And I was surprised. Whenever I'm surprised, I always want to put it out on social media.
That's definitely surprising. That's a lot higher than I thought. I'm gonna like that and retweet that for you as well, sir. So we can get some good love for Dr. VIX. If you're not following the Mr. Corner office at Russell Rhodes, two L's in there, and our Rhodes, not like the road you might drive on, but RHOADS. While you're at it, also follow Mr. Option Pit over there as well, at Option Pit. Speaking of which, Mr. Option Pit, what are you cooking up over there in the realm of Option Pit as well as Carmen Line?
Well, I got a fun thing I'm working on with LiveVol too that I'm absolutely not allowed to announce yet. But that'll be coming up. We're actually going to announce that at our July event that Russell Rhodes and I and you will be speaking at in Chicago from July 19th through the 23rd. Come and see Russell talk VIX. I'm going to talk premium selling. I'm gonna be Mark the Super Trader. I'm gonna tell you all about how you can easily sell strangles. Kidding, but I will talk about how to properly set up butterflies and condors and things like that. And then we're gonna do some live podcasts. It's gonna be a great time. You can sign up in the show notes that'll be put out. You can. It's the Professional Trader Summit in with Option Pit and the CBOE. Check it out in the show notes. Support the show.
I didn't know Russell was coming, so there you go. More reasons to attend the Professional Traders Summit. We'll do some live shows there as well, which will be kind of fun. You get to see Russell, which may or may not be a draw, depending on if you met him before in the past. I'm just giving you a hard time. And, of course, all sorts of other fun stuff. It's a multi-day extravaganza.
It's gonna be great.
So check it out if you haven't done so already over there at optionpit.com or just via our site. Via the link there, click on that, and that'll take you to all the fun stuff in the show notes. People tweeting, great show so far. Thank you. Thank you, Gabe, and others who like the show so far today. If you haven't joined us live, make sure you do so every week, noon Central, 1 p.m. Eastern. It's fun. You get to see how the sausage is made. And then, of course, the following Monday, you get that nice, beautiful, edited package that you get as well. So however you like to consume our stuff, we thank you for listening. And on behalf of Mark and Russell, and indeed myself, we'll see you next time, right here on Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.